Happy to have got one more opportunity to talk about the joker of our market. Any guess about the company? The one that is the most diversified conglomerates of our country, having presence in the FMCG, hotel, paperboards, packaging, agri, IT, along with cigarettes. Let's grow with ITC. ITC has a portfolio of 25 world-class Indian brands in their FMCG space. Begin your day with disinfection through Savlon. Indulge with Vival, taking care of your skin. Engage yourself with the luxury fragrances. Relish your breakfast with Ashirwad. Go bingo on your snack time. Cool yourself with Be Natural. Enjoy the fable world of luxury chocolates. Papercraft your experiences of the day, or become a classmate if there is more experience to capture. Sunfeast your memories with your evening tea after the Mangaldeep prayer that got bright with AIM. Many of these products are market leaders in their segment. ITC had a revenue of 47,000 crores and a profit of 13,000 crores in the calendar 2020. Sales growth was at down 5%, profit growth was down 12%, and margins took a hit of 3%, now showing at 27% on the margins for the consolidated business of ITC. Their mainstay cigarettes business had a revenue jump of 3.5%, while profits took a dip of 8.1%. This became a very big concern for ITC among its investors in the market. ITC got spared from tax hikes in the current budget, which went on well in stopping the illegal consumption of cigarettes which comes through smuggling. This should help growth in volumes in the coming quarters for ITC. In their FMCG space, business went up by 12%, profit went up 28%, and margins got expanded by to 9.2%. Yet the margins have been far away compared to their peers in the market. Staples, convenience foods, health and hygiene business went up by 23%, while their discretionary business took a hit of 5%. Bingo, Candyman, Engage, Mangaldeep businesses were down. Savlon crossing the 1,000 crore mark was a big achievement that ITC had in the last quarter. Education and stationery business is still in the ICU because of school closures. Hotels business has become EBITDA positive in this quarter. 2 new properties were launched in Port Blair and Simla. Recreation destinations have been running full as the world is coming out of COVID fears. So soon hospitality business should be showing big numbers in the coming quarters. My personal experience with ITC properties in the recent 2 visits that I made to their premium facilities, hospitality was par excellence, while all their properties need more attention on maintenance to show their real premium look. ITC stock has had a peak valuation of 34.34 times its earnings and lowest valuation of 11.16 times so far in the market. Now the stock has been trading at 19.8 times its earnings, which is lower than the average that the stock has had in the past. This indicates that ITC stock is available at lower price in the market today, and it will not run up in a hurry just because it is cheap now. The FMCG sector as a whole has become unattractive today. This gives us an opportunity to buy these stocks as they are going low, so that we have our position ready when the market goes up next time to give us great returns on our investment. Also, the FMCG businesses have been slowing down which is taking a toll on the prices of all the stocks in the market today. ITC is a stock that can be invested to get regular income in the form of dividends. The company has made a policy to distribute 80% of the profits that they make as dividends every year to their investors. A good profit-making company that has consistency in its growth, which can be depended upon for regular income in the form of dividends. For the financial year 2021, ITC has paid out 5 rupees per share as interim dividend so far. One can expect to have another 3 rupees 25 paisa from the company as the year completes. This takes the dividend yield for the stock at its current price to 3.92%. Fairly good for a long-term investor, as they are going to get regular income in the form of dividends along with appreciation in the stock price in the coming years. ITC has been growing at an average of 7 to 10% in the last 10 years. There is all possibility that this growth rate will continue for some more years to come. There can be some bouts of negative growth which will get comforted with big gains in subsequent years. With its current earnings at 10 rupees 59 paisa per share, at 8%, 10 years from now, ITC earnings should be at 22 rupees 85 paisa per share. At its average valuation that the company has, which is at 22.5 times its earnings, ITC stock should be trading at 514 rupees a share 10 years from now. This takes the growth on the investment to 150% along with dividends that the investor will get for the next 10 years. In our calculation, 10 years from now, ITC share should be getting 14 rupees per share as dividend. ITC is a gold mine stock to acquire or accumulate for lifetime wealth creation at current prices. One caveat here, it is a stock that can be accumulated or invested only if you are looking at lifetime wealth creation. That is, buy it and forget it, create a legacy for your next generation. If you are looking at trading or short-term gains, ITC is not at all a stock to look at. Don't ever get closer to it.